ECB's De Guindos hints at a possible rate cut in September. Welcome to Market Insight. I'm Ludovica Brignola. In Europe, a 25 basis point cut is expected in October, but ECB's Vice President Luis De Guindos hinted at the fact that there might be one in September. De Guindos said the ECB paused last week after cutting rates in June because it would have more data in September, including fresh internal forecasts for inflation through 2026. So what should investors expect? Well, to help answer all that and more, I'm joined by Carsten, Brzeski, Chief Economist, Eurozone at ING. Thank you very much for being with us today. Right, so Eurozone inflation stabilized at around 2.5% year over year in 2024. Are we now expecting any meaningful moves in the second half of the year?
It's going to be a wobbly development for the second half of this year. I think now when you look at the July numbers, August numbers, they could be still highly impacted by all the sports events that we had in Germany, that we're having in Paris now with the Olympics. So we could see some upward trend in services price inflation. And on the other hand, we see that the economy is still strong enough, even though it's not absolutely strong, but the economy is not weak enough to really see a drop in demand and hence producers really reducing prices. So I'm expecting that we will see inflation somehow hovering between 2 and 3% in the second half of this year. And it is still slightly too high for the ECB to give the all clear.
It is still slightly too high. And I would ask you, when do you expect inflation to reach the 2% target?
Yeah, I'm a bit more skeptical than the ECB. The ECB in June, when they presented the last big staff projections, they said that they expect inflation to be at 2% in the fourth quarter of 2025. For this forecast, it's highly crucial. What do you expect about wages? The ECB expect wage growth in the Eurozone to nicely settle down in the course of 2025. I'm a bit more skeptical because when I look at union demands in the second half of this year already, when I also see that we have labor shortages in the entire Eurozone, I think that 2025 could still bring us pretty high wage growth and therefore also delay the moment in which inflation in the Eurozone will really drop back sustainably to 2%. So to me, this will rather be early 2026 than late 2025.
Right. And Christine Lagarde said that the September meeting is wide open. And Guindos today added that September is much more convenient than July to take decisions. Do you really think that we'll see a cut in September?
We have almost 2 more months to go. And currently, it's, in my view, a 50-50 decision. Of course, both are right, and that always holds. In the future, you will always have more data available. That's the nature of time and the nature of central banking. And indeed, they're right. By the moment of the September meeting, we will have the first estimate for second quarter GDP growth in the Eurozone. We will have 2 additional inflation prints. We will have 2 additional PMI, IFO, business sentiment indicator prints. And we will have the big ECB staff projections released in September as well. So indeed, if the ECB wants to cut again, it will be September. And we will have to see a confirmation that the ECB still sees inflation dropping to 2% by the end of 2025, not later, if this is the case. If we also see that growth slightly continues to disappoint, at least compared with earlier ECB projections, then the moment would be there for the ECB to continue cutting in September and then deliver a third rate cut this year at the December meeting.
Right, and some more important data for the bloc coming out tomorrow because we'll get French and German PMIs for July. What do you expect on that front?
Yeah, France will be extremely interesting because there we already saw a drop in the PMI last month. We have continued political uncertainty, which I think will continue to weigh on business sentiment in France. So I would expect, at least for France, another drop in the PMIs, both services and manufacturing. Germany, we're coming from a very low base, especially when you look at manufacturing. And even though manufacturing had continued to disappoint there, I could see a small uptick in the PMI manufacturing, plus services should have benefited a little bit from the fact that Germany hosted the European Football Championships. So I would also think a slight uptick in the PMI composite for Germany, slight downward tick for France, which probably then would mean for the entire Eurozone almost unchanged.
Interesting. And very quickly on Germany, manufacturing PMI has been quite disappointing for an extended period of time. I mean, in Germany, it's been below 50 for 2 years now. Why do you think that it's been the case? But also, how can policymakers try and reverse this?
Now, what we see in Germany is the combination of both cyclical and structural headwinds. And we all know about this, the cyclical headwinds, changes in global trade, but also higher interest rates. But the structural headwinds are even more important in the German case. And that is the fact that a changing role of China when it comes to German exports. So China has become a system rival and is no longer just opening its arms for German exports. The other one is the energy dependence and energy price uncertainty, which has also held back production in Germany. And we do have a very high inventory level right now, and we do have very thin order books. So at some point in time, this should turn around.
Carsten Brzeski, Chief Economist, Eurozone at ING, thank you very much for being with us today. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.